Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and welcome to the daily analytical report with Alpari. Most recently we don't have any significant movements on the market. The trading is really calm, but today I have to tell you that on a few instruments we do have interesting trading signals and actually game changers, like for example on oil, where we finally have a breakout from the long-term symmetric triangle. The breakout is bullish. The breakout is mostly driven by the higher demand for oil from Asia, and also is driven by the comments from OPEC members that most of the countries they committed to the deal, to the agreement. So that is lifting oil prices higher. What is more, we do have a much stronger American dollar recently, mostly because of the hawkish comment from Mr. Harker from Philly Fed. He said that March is actually not off the table, and that they still would consider March as an appropriate date for a rate hike. So, chances for March were around 30-40%, but now those chances for a March rate hike, they are going up, and that is why American dollar is gaining strength. You can see that especially on euro to American dollar, which is now going lower, despite the better than expected data from Eurozone, PMI Eurozone. Most of the data, if not all, were on the green side of the market, so were much better than expectations, and despite that the price of euro dollar is going significantly lower. Let me show you the macro calendar first. Obviously, before we start any trading, we need to carefully look at the calendar to see what should we expect today. So, as you can see, much better data from Eurozone, but euro dollar is not going higher. What do we still have left is PMIs from United States, and actually now Mark Carney is speaking, Bank of England governor, so we should expect higher volatility on British pound to American dollar, and most probably we're gonna see that during the webinar. As it is our first meeting this week, we can take a look on the calendar. But as you can see, apart from Wednesday, we do not have any significant data. So on Wednesday, we do have FOMC minutes, retail sales from Canada, so influential data from Canada, and overnight today we do have a Philip Love speech from Reserve Bank of Australia. And from the most influential data, that would be it. Today we also do have GDT price index, which is important for New Zealand dollar. If you will see a sudden spike in the price of New Zealand dollar, that would mean that the GDT price index was just released. Let's take a look on the charts then. This is euro dollar, and as you can see, despite the better data, euro dollar is going down, mostly because of those hawkish comments from Fed and the possibility of a rate hike in United States. What I tweeted about yesterday here was inverted head and shoulder formation. Left shoulder, head, right shoulder, and it was actually a good idea. Now we can see that it wasn't a good idea because the price is not going down, but this setup looked good at the end of the last week when the price was here, and there was a probability that we will have a right shoulder. I'm always telling my traders not to go too early, not to follow too early this pattern, because that was just a potential. Inverted head and shoulder is a head and shoulder once we have a breakout of the neckline, right? Here we didn't even touch the neckline, so that was a possibility of the formation, not the buy signal itself. As you can see, when the price will break the lower line connecting the bottom of the head and the bottom of the right shoulder, when the price will break it, and that should trigger a sell signal here, and definitely deny the buy signal on this instrument. So euro dollar is looking more bearish. At the moment the bullish signal is off the table, most definitely, and here we should more look south, but again, not definite, because they still have important support ahead of them. As you can see here, that's an important support ahead of them. They can easily bounce from this level. Maybe not easily, but it's possible, and it's probable. So in my opinion, the trader can think about opening short positions once we will break the lows from the last week, and we'll break this line connecting the bottom of the head and the bottom of the shoulder. So currently the sentiment is neutral. There is no trading signal here, but we are very close to the sell signal on euro dollar. That is, I think, a good conclusion for this instrument. On British pound to American dollar, what do we have here is an attack on the lower line of the symmetric triangle here. As you can see, for the last few days, the volatility dropped significantly. As you can see, in a few days we had a volatility of 360 pips. Then we had a volatility of 200 pips. And then we had a swing of 130 pips. Now we're having a swing of 70 pips, and as you can see, the price is defending the lower line of the symmetric triangle. So actually it can be very similar here. So the price was declining sharply, and they can defend this line the same as here. When I was recording a trading sniper video, and it was 1 hour ago, I highlighted the opportunity of a bearish breakout here, but I also warned before going short too early, because just below 20 pips, which for British pound to American dollar, which for cable is a very low amount of pips, 20 pips below there is a horizontal support. So even if the price would break that lower line of the symmetric triangle, still the price would have an important support ahead of, and with a high possibility of a bounce from this support, right? So going short here was a bit too early. In my opinion, a short position would emerge only after the breakout of this support, somewhere here, right? But as you can see, with this bounce from the lower line of the symmetric triangle, it looks like it won't happen. It looks like the price will advance higher from this point and try to attack the upper line of the symmetric triangle. But obviously, the situation is still developing. Again, there is no definite signal here, so the sentiment is not bullish, is not bearish either. We are exactly in the middle of the recent swings, of the recent price swings, so the sentiment is neutral. But we are getting very close to the moment that we'll have a trading signal here. So that is why it's nice to stay in touch with the situation on this instrument. In my opinion, it is a wrong approach to try to pick the side right now, because the probability of an upswing and downswing are more or less equal right now. So trying to pick a side is pointless at this moment, right? I know that traders want to do it as soon as possible to earn as many pips as possible, right? But in my opinion, the better approach is to wait a little bit to gain a little bit of certainty, give those 200 pips or 100 pips, but gain a little bit of certainty in order to earn 1000 pips, for example, right? So my approach is rather a little bit of waiting to gain a bit more of certainty. Another instrument is American dollar to Canadian dollar, where they finally, it seems like they defended this horizontal support. On a daily chart, it was done with this hammer candlestick, and after the hammer candlestick, we had 3 bullish days in a row. So this defense, which was done on Thursday, seems legitimate. Also, in the same time, the price broke the line connecting recent lower highs. So it looks like the midterm bearish correction is over here, and the price is coming back to the long-term uptrend. Silver obviously will do in pair with gold. Look at that, silver after breaking this upper line of the channel up formation. Okay, made almost all days were positive here, and now it's time for a correction. Since the end of last year, we had only one correction here, which lasted 1, 2, 3, actually from here, which lasted 3 days, right? So that wouldn't be a surprise if we had a correction which would last, like, for example, 5 days. But anyway, even if the price will decline here, next few cents, okay, as long as the price stays above the blue line connecting recent higher lows and being a main support here, as long as the price stays above the support, the sentiment is positive on silver. That's definite. Again, I would like to mention one thing which I was telling on a Friday, that the fact that stocks are going higher and gold is and American dollar is stronger, but in the same time gold and silver are pushing higher, means for me, at least for me, that something's going on. And I have a theory that now smart money are escaping from stocks. Why is that? Because we had 30 days without daily change exceeding 1% on S&P 500, for example. So the volatility on stocks is very high. In my opinion, this is how the peaks are made. That they just cannot push the price, and where they are pushing the price higher and higher and higher. But those movements are insignificant. So in my opinion, those upswings are made by the street, by smaller investors that are usually too late for the signal. And they are buying stocks, but smart money are selling, escaping from their long positions, and they are locating their equities, their capital, their money into safe haven assets, like for example gold and silver. That explains why gold and silver is going higher despite new records on stocks. It shows me that smart money are now in a position of gold and silver. Generally what price action does is price action is trying to follow smart money. I'm trying to follow smart money, so that is why I'm positive. I'm an optimist on silver and gold as well. This is, for example, silver. To wrap that up, what do we have as an upswing? potentially a start of a correction, but as long as we're above the blue line, we're safe. On gold we tried to break $1,245 per ounce again. On a daily chart, it didn't look promising because the price created a double top formation. But look at that, here was a double top formation as well. Then after a 3-4 days correction, we get an upswing. So they shouldn't worry about that. What do we have here? Is a situation kind of similar to this one on silver. The price advancing higher, and as long as we stay above the line connecting recent higher lows, we are positive, even despite the fact that there is a head and shoulder formation here, but it's relatively low. And even if I would like to draw, for example, a neckline, or even here, and we would make a potential target, which personally I do not believe in, but anyway, we can see that the price, the potential target for this retracement is 38.2, which is absolutely normal, and we shouldn't worry about that. But we shouldn't worry as long as the price stays above 38.2. But breaking 38.2 Fibonacci level, so this green area, can be catastrophic for gold and can wipe out all the profits that they made since the beginning of the year, right? So far it looks promising. Higher highs and higher lows. They stopped on an important resistance. We shouldn't be surprised about that. The upswing was strong, as you can see. The resistance is strong. So it was expected that the price will stop here. But to keep the bullish dream alive, they should stay above 38.2 Fibonacci level. Because if they won't hold before 38.2 Fibonacci level, the next stop is significantly lower, because it's over $40, $35 lower, right? So first stop, trend line. Second stop, 38.2. Third stop, 23.6. First two are alright, as long as the price stays above here. But the third one, going there is a little bit too risky and can be too deep. But again, $1,245 per ounce is a very strong resistance, as we can see here, and it can take a while before they will be able to break it. But anyway, as on silver, as long as we stay above the trend line, the sentiment is positive. Australian dollar to American dollar. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We had a 12 correction in a row, which was almost the same. So this rectangle shows 70 pips, but this correction was 76 and gave 34 pips. But maybe this pattern is coming to an end. Why is that? Because we made the first step for the end of the upswing, because the price aimed for the lower for the trend line, and actually it looks like it's gonna be a successful trip for them. When the price will get here, 50 pips lower, that will be the definite end of those correction equality movements. On higher time frames, why we are bouncing from this resistance? Well, not a surprise. Look at that strong horizontal resistance. Even breaking this line in the long term won't kill the positive sentiment, because the positive sentiment stays here as long as the price is above 38.2 Fibonacci level. And look at that, for the last 2 months we didn't have any bigger correction here. So Australian dollar is advancing higher and is very strong currency. At our newsletter that we sent to our clients at the beginning of the year with our scenarios for 2017, we said that Australian dollar will be one of the strongest currencies from this basket. Obviously, we said that American dollar will be much stronger, but Australian dollar was not far from the top. And what is more, Australian dollar is highly correlated with gold. So gold was advancing higher, Australian dollar was advancing higher. Australian dollar was advancing higher, and gold was advancing higher. That was the situation on the market. Is the situation on the market? Maybe it's time for a correction, right? Maybe it's time for a correction, and as we say, even the drop of 140 pips won't be anything strange here. That will be just a typical movement, right? Especially after such a strong upswing where we made over 560 pips without any major stops, right? We cannot say that the downswing for 90 pips is a major stop. No, it is not. So most probably we are experiencing an end of the correction quality patterns, but we will stay on this instrument because it's trading very technically recently, and it can give us more good trading opportunities. Like for example, if we would have a nice and a bullish bounce here on this horizontal support or on this, that will be a risk worth taking. Euro to Australian dollar, where on a daily chart we spotted this potential reversal. It happened just a little bit. We were in this position, we closed it on break-even point, or even we captured some profits. But again, that is why entering the reversal patterns is very risky, because even we had this nice upswing. At some point even 170 pips, right, from the bottom to the top, 180, but it would be hard for you to catch such a movement. So maybe it brought you 80 pips, for example. But in the same time, we said that it is very hard to go counter trade. It is always more risky, and generally that people shouldn't do that, but they do that. But it's how the people trade. And look at that. Probably we will test this support again with a possible breakout here. Canadian dollar to Japanese yen. I think they stopped this downswing for a little bit. Our sentiment here is still positive. We are just waiting for the price getting exactly here to renew our long position that we opened here, and we close this long position somewhere here. New Zealand dollar to American dollar. We told you when the price was here that they will either break from this resistance or will break this support. First, they bounced from this resistance that we highlighted, and now they are about to break this support that we also highlighted. And everything is caused by this false breakout. Well, not everything, but from the technical point of view, this retracement is caused by this false breakout here. British pound to Australian dollar. What we do have is a symmetric triangle here, and the price pushing on the support of the symmetric triangle, which creates a chance for a breakout, for a bearish continuation of this movement. So far, again, they can defend it, right? It wouldn't be a surprise. It wouldn't be a great surprise if they would defend it. But at the same time, that's not actually a bad idea to wait here. Wait here for a breakout. British pound to Swiss franc. It's in a kind of similar situation. This is a weekly chart. Also, they are putting pressure on the long-term support, but at the same time, they are creating a reversal pattern, which is an inverted head and shoulder formation here, left shoulder, head, and right shoulder, we are below the neckline, so there is no buy signal yet. But once we will break this line, the buy signal will be created. At the same time, there's a smaller symmetric triangle formation here. Usually, when you have inverted head and shoulder formation or head and shoulder formation, you should connect the head and the right shoulder together to give you trading opportunities in the other side as well. New Zealand dollar to Japanese yen. What do we have here is a potentially very strong sell signal with the price bouncing from this resistance, right? But what do we need here? Well, we already have a double top formation, but what we are waiting for is a bounce, is a break of this horizontal support here, which would trigger a sell signal here. Okay, potentially sell signal for 260 pips with a stop loss, let's say 70, something like that. So good risk to reward ratio. As we say, risk worth taking, especially that you're going with a trend, right? Here we are bouncing from the resistance. Australian dollar to Canadian dollar, what do we have here is a price squeezing. They will have to choose soon. If they want to break the resistance and continue to go up, or they will want to break the support and initiate a downswing. Euro to Norwegian krone, new bottoms, head and shoulder formation, the situation that we highlighted a long time ago. Then a rectangle, breakout of the lower line of the rectangle, then a smaller rectangle again here. Okay, and we are just now experiencing a breakout, so new fresh lows since the July 2015. Pretty remarkable. Euro to New Zealand dollar, inverted head and shoulder formation, but again, wait for the breakout, don't go long now, wait for the breakout of the neckline. As well, we don't have it now, so there is no buy signal whatsoever here. Okay, a few minutes, in those few minutes let me show you the breakout on the Brent oil, as you can see here. So we are locked in the symmetric triangle since the beginning of December, and price couldn't break it. Well, there was a smaller one here, so there was a breakout here, but after that the price went lower and punished those traders who enter with long positions here, as usually happens with the false breakout. And now we have another attempt. Obviously, as it always is with asymmetric triangles, we do have a horizontal resistance straight after the breakout. So here there is no buy signal. Buy signal will be once the price will manage to go to this checkpoint here. Okay, and DAX, as you can see, even DAX is advancing higher. What was the high here? 902.5. What is high now? 900. 910. So we do have a higher high. We do have new highs on DAX. Everybody's happy. Well, those who hold long positions, but we are happy too, because that was our base scenario when we were breaking from the wedge correction here on DAX. It was somewhere here, bouncing from the horizontal support. Right. We had this wedge. Okay, and that was a nice invitation to go long on DAX. and the party goes on. But who's buying? Again, in my opinion, not smart guys. Smart guys are buying gold right now. It's the game. Now on stocks, in my opinion, is the game who will turn off the light last. Stays with nothing. That's how usually trends end. But it's only my opinion. I'm a trader, not economist. I try to trade what it is, not try to predict the future. If I had to trade here, I would go definitely long, right? Because that's what the situation is. And as I said, I'm not trying to predict the future. I'm trying to trade what it is right now without a bias. If I had to trade, I would have to respect technical analysis, and technical analysis is telling us to go long here on indexes. That is why I'm not trading, because I'm opening only trades which I can commit to and which are good for me from all sides, which I can feel comfortable with. That is why I truly believe about quality over quantity, right? I can open less positions, but I need to be absolutely sure that they are the one.